The excitement around AI in accounts payable and finance is understandable. Our research shows it's the #1 priority investment for the future of accounts payable, with AI-enabled teams seeing average time savings of 44% and cost savings of 34%. However, expectations around what AI can realistically deliver and the conditions it needs to be effective are still unclear for many. The truth is that AI isn't about achieving total accounts payable autonomy or replacing finance teams. Its value lies in supporting accuracy, control, and decision-making, both in day-to-day operational work and at the finance leadership level, all while reducing reliance on manual processes. And as adoption continues to grow, trust and human oversight remain vital. This video shows where AI in finance helps accounts payable teams today and how to adopt the right AI tools to improve productivity and control while minimizing risk. Here's what you'll learn: where AI tangibly helps AP teams through real workflow applications, where AI struggles to deliver value based on how AP workflows are structured, why trust, control, and visibility matter more than autonomy when adopting AI in finance. What is AI in accounts payable? AI in accounts payable leverages more than just machine learning, and it maximizes automation to speed up and improve the accuracy of invoice processing. It captures invoice data, matches it to purchase orders, routes approvals, flags errors or fraud, and even predicts the best time to pay. AI learns and adapts as you go, continuously refining processes to help you make smarter payment and cash flow decisions. AI-powered agents are helping execute prescribed routine finance tasks. The result? Lower processing costs with improved accuracy and visibility, freeing finance teams to focus on strategic work instead of manual tasks. AI in AP isn't about replacing people, it's about empowering them to focus on what matters most. Where AI in accounts payable actually helps. When applied effectively, AI in finance improves consistency and efficiency for teams. At the same time, it supports better decision-making, oversight, and productivity at a leadership level. The 2,300+ respondents to our Global Finance Outlook survey expect AI to create value for their finance function in key areas like financial reporting, 40%, invoice processing and management, 37%, fraud detection, 31%, and budgeting and cash flow, 31%. But trust remains a major hurdle to adopting AI at scale. 48% of the respondents to our State of AI in Finance study are either extremely or somewhat concerned about the risks of using AI. Finance teams want to know where their AI tools' data comes from, how well they work with legacy systems, and that sensitive information will remain secure. That's why the ability to review and override AI outputs remains critical in finance, where the bar for precision is so high. With that in mind, here are 5 practical ways AI in accounts payable can reliably support AP teams without reducing control. Invoice data capture and validation. Extracting invoice data more consistently and accurately so it can be used with confidence across the AP process. Duplication and anomaly detection. Flagging duplicates, unusual activity, or potential payment errors earlier than manual review. Approval and audit management. Showing which approvals, exceptions, or reviews need attention first to reduce delays and bottlenecks. Fraud, tax, and compliance signaling. Identifying patterns that may indicate increased risk and supporting supplier compliance checks and onboarding. Purchase request, POs, and expenses. Automating receipt capture, submission, matching, and request handling to reduce manual work. At a more strategic level, AI also provides powerful decision and reporting support across spend, suppliers, and workflows. With the right systems in place, leadership can more easily see what's happening across their departments, where their attention is needed most, how controls, workflows, and risk management are playing out, and where to make changes. Together, these wins turn AI from a promising idea into something finance leaders can actually rely on, but only when the right foundations are in place. Where AI fails in AP workflows. Despite despite its potential, AI can't deliver meaningful time or cost savings when the underlying AP workflow lacks structure or consistency. Common obstacles include fragmented workflows across tools. Key steps like invoice intake, approvals, payments, and reconciliation happen in separate systems, limiting context. A lack of integrated finance operations can hinder effective AI. Manual workarounds and exceptions. Offline fixes stop AI from seeing how work actually flows. Unclear ownership and controls. When responsibility and approval logic aren't well defined, AI can't support prioritization or risk detection effectively, so errors still show up late. In these environments, AI simply lacks the dependable context and data it needs to work well. Then, it either produces limited insight or requires extra manual oversight to validate outputs. This isn't a failure of the technology, it just reflects a simple reality. For AI in finance to function as intended, it depends on clear processes, connected systems, and reliable signals. Automation versus AI in accounts payable. One reason AI sometimes underdelivers in accounts payable is that it's often expected to make end-to-end workflows fully autonomous. Although this may happen in the future, this is not an immediate expected outcome. Understanding where AI fits best means drawing a clear line between automation and AI, as they play different roles in the AP workflow. Automation follows predefined rules, delivering predictable outputs and making repetitive processes faster. It handles structured tasks like routing approvals, scheduling payments, matching purchase orders, and moving invoices through specific stages. AI learns and adapts from data, providing flexible, context-aware outputs to support decision-making. It handles complex, unstructured tasks like flagging risks based on patterns in information and categorizing expenses, helping teams direct their attention where it's needed most. Automation creates consistency and structure. AI builds on that foundation to add insight. Once that distinction is clear, finance teams are better equipped to decide what to fix first and where AI can add value without increasing risk. Why AP structure matters for AI trust. Clear structure and connected workflows provide the context AI needs to be helpful. When accounts payable runs on connected, automated workflows and data flows cleanly between key steps, AI works from consistent signals instead of isolated events. AI tools can see how invoices typically move through your process, where delays tend to happen, and when something genuinely falls outside expectations. Instead of reacting to individual transactions, AI can help teams monitor activity across the full invoice-to-payment process, identify patterns that point to breakdowns, delays, or increased risk, show where controls aren't performing as expected. This maintains human oversight and makes it even more effective, giving finance leaders clearer feedback on how their processes and decisions are actually playing out. AI agents handle routine finance tasks, from generating reports to creating purchase requests, allowing teams to pivot their focus to high-value strategy. However, autonomy doesn't have to mean a loss of oversight. Ultimately, it's how teams overcome the trust barrier to achieve effective AI adoption, and how they can stay productive, fully compliant, and audit-ready as invoice volumes rise without hiring additional staff. How to adopt AI effectively in accounts payable. Before layering AI into your AP workflows, there are two key steps to get right. First, standardize your workflows and processes. Define how invoices enter your system, how approvals flow, how exceptions are handled, and who owns each step. This consistency gives AI reliable data to learn from. Second, connect your systems and data. When invoice intake, approvals, payments, compliance, and reconciliation live in connected tools, AI has the full picture it needs to produce reliable insights. Only then does it make sense to layer in AI, because AI works best when it builds on clean processes and connected data. How Tipalti uses AI in accounts payable. Tipalti is a proven example of how structure and connectivity enable AI to enhance control and productivity for finance teams. Instead of standalone features, Tipalti embeds purpose-built AI agents directly into the accounts payable workflow, where they perform specific tasks on behalf of humans. At a practical level, that means end-to-end automation creates consistent data and workflows AI can rely on, giving it the foundations to work accurately now and become even more valuable over time. Built-in approval logic, compliance checks, and audit trails act as guardrails for how AI is applied, so teams can harness the technology with confidence. AI works within the financial and regulatory controls already built into Tipalti Accounts Payable and Tipalti's other finance automation solutions. As a result, finance teams can scale transaction volumes and supplier complexity without adding risk. Productivity increases, visibility improves, and control remains firmly with the finance team. Learn more about how Tipalti's proven approach to finance AI helps scaling teams thrive in our AP automation playbook. And if you found this video useful, please subscribe for more helpful tips and accounting insights.